The Reserve Bank has warned that 40,000 jobs could be lost if the economy remains stagnant or does not move, or there is no improvement. Prices are creeping and they are increasing, and our national drama queen, Rand, is moody. That's Mzansi's money madness. Here, let's unpack it. Fam, have you noticed you get paid on Friday and by Monday you just need that quick cash or that low interest loan? But don't take it. Don't. And it's not witchcraft. Welcome to Cash and Countries. From now on, we will be reviewing South Africa's economy on monthly basis to see how the country is doing and to understand better. Welcome to Class 2.0, where we try to explain the economy the best way we can. And also, did I mention welcome to Cash and Countries? And not only South Africa's economy, we will be looking at various countries and the performance of the economy. Welcome to Cash and Countries. So, inflation creeping. It's a big word for some people. Let's make it simple, right? To explain it even further, inflation literally means that the 100 rand that you have buys less stuff today than it did last year. And some companies, instead of increasing prices of goods and services, they decrease the sizes to keep the price where it is and accommodate their consumers. Last month, inflation was 3.3%. Now it's at 3.4%. That's like if you had 10 chips in your lunchbox yesterday, you woke up with one missing. And I guess we can say inflation ate it. Prices are increasing, or we can say they are rising. Why? Because electricity and rent went up. Food prices, especially bread, oil, and maize, are very spicy. No, not that spicy. Petrol is like, surprise, I'm up again. And we are like, oh God. And most of us, we use transport to work. If you don't use transport to work, you are very fortunate. But somehow you use transport. So petrol affects us. Expert, they call that being under control. But to tell the truth, our wallet calls it trauma. If inflation keeps creeping like this, we'll soon be buying bread in slices individually. Like, imagine going to my friend, can I please have 3 slices? Payday is next week, I'll pay you, my friend. And you know how difficult those people are. Now, the South African Reserve Bank have warned that 40,000 jobs could be lost if the economy stays or remains stagnant. When businesses make less money, maybe export drop or production costs rise, they cut staff to survive. That's like when your mom says, no meat today, we are stretching the shoe. Weak growth. The economy is not growing fast enough to create new jobs. High costs, petrol, electricity, and imports are very expensive. Tariffs. Other countries are charging us extra for trading with them. I'm not going to mention any country. In short, we can say that businesses are stressed, workers are nervous, and recruiters are chilling like, sorry, we're not hiring right now, and that's frustrating. At this point, job security feels like Wi-Fi, very strong in the morning and gone by lunchtime. On to the next segment. Let's look at the rand's mood, because our currency is very moody. It's like rand is our national drama queen. Like, let's just be real. One day it's strong, like 17 rand, and that's not even strong because rand used to be very strong. But the next day it's very weak, at somewhere around 18 rand 50, 19 rands. It's like that friend who says that they've changed but forgets everything they told you once they leave your yard. Why? Global markets panic. Wars, oil prices, US dollar rising. There is no master of pronunciation. Investors worry about our economy, slow growth, right? And sometimes rumors alone make the rand shake like a balloon in the sun. When rand is weak, importing stuff, fuel, electronics, clothes becomes more expensive. That means inflation even gets worse. And your online Shane card becomes a horror story. And we end up saying that Shane is way too expensive. Why? Because of rand and inflation. When we say weak rand, it just means it takes more rands to buy $1. So instead of 17 rands, now you need 18 rand 50. See, your money just lost the gym motivation. Inflation target. So government and the Reserve Bank are plotting. Good way, bad way, we don't know. And they're planning to have an inflation target of 3%. Right now it's 3 to 6%. That's like saying from now on we'll allow only small prices increase and not wild ones. Why does this matter? Because if inflation stays lower, the government can save money on interest for its debts. There is no master of pronunciation. They are saying it could save 900 billion over time. That's a billion with a B, like enough to fix potholes on the moon. If they really save 900 billion, can they maybe buy us a new bus or at least fix one traffic light in Johannesburg? So this week on Mzansi's Money Madness, prices rising, rand misbehaving, jobs ghosting us, and Reserve Bank thinking about a diet plan. If you learn something, just laugh and give me a reaction. Next week, we will unpack the sectors that are safe for 2026 and which ones are going through a midlife crisis. Catch you next time, fam. And remember, when money talks, always listen with a calculator.